afternoon, everybody, and we're back with another edition of Beyond Connections, your bi-weekly online avenue to ask us analysts from Abaca Securities and MyTrade your questions about the stock market, about your portfolios, about any issue that you are interested in, stock issue, not other kinds of issues. I am Elite Best from the research department of Abaca Securities, and today with me, I'm joined as usual by.
Hi guys, I'm Rainier and I'm an analyst that covers the consumer and energy companies.
And I'm Isaiah. I do some of the technical analysis for Apple Securities and my trading.
Okay, we've just concluded the second quarter earnings season. Medyo ngayon lang nakakahinga ulit with the numerous briefings but that's given by the companies. Rainier, so far, what do you think about the earnings season for the PSE companies?
Well, for at least for my coverage or basically what happened in the first half of 2024, there have been a lot of positive surprises in Q2. That's why we've seen some of the stocks, especially in the index, have pretty much been on an uptrend after the past 2 weeks, and it's also helped by what happened last week, which was the BSP cutting rates.
Finally.
Yes, and I think what we are seeing the past week is the index trying to reach the 7,000 level, which it did for about a few moments. I think the other day or yesterday, but it's still close below the 7,000 level. So I think today we're still up, uh, basically a shade below that level. And what do you think, Best? What will help us make the index reach or go even past that level?
Well, there will be a couple of economic indicators will be coming out um, in the first week of September, so that's not too far from now. So mainly that would be the August inflation rate, which will be announced September 5. And of course, we'll be looking at that, or the market will also be looking at that in the context of further rate cuts or the timing of possible further rate cuts by the BSP. And also, we will be monitoring, or a lot of people are also monitoring, how the US Fed will decide on their own monetary policy. The next meeting is also early September, I think. So that would also um, can also determine how the BSP would move, and the dynamic between the monetary policies domestically and the US would also affect our exchange rate. Um, so that's basically the most pinakamalapit na mangyayari that could affect or that could push the index higher. So I see so far. What's the technical picture for the index?
So for the index, um, so can we show the chart of the index so far so the viewers can see the price action?
The chart. Can we show the chart?
Um, So, as you can see, since 2000, late 2022, the index has been in a very, very wide range here. We recently tested this very large, very long downtrend line here, going all the way back to 2018. So I guess the key level here to watch would be about 6,700 to hopefully it never goes back to 6,400, which is closer here to this downtrend line here. Um, One question now is, I don't know what Rainier said, what's going to make it finally break out of this range that's been stuck in these levels for such a long time. So, yeah.
Okay, so far, we're seeing one question in the chat box. So for Our viewers, please feel free to type in your questions and we'll do our best to answer them. So from Ken, first up, uh, DD has 70% of Hotel 101, and assuming dilution rate coming from new investors in the SPAC side at historical high levels of 40%. Sorry. Yeah. Hotel 101's 2.3 billion dollars is equal to about 130 billion peso valuation, which means around 65 billion pesos. Okay, valuation for DD's share in
in
Hotel 101. So even if applying zero point 0.5 times discount and basket discount, still worth more than the 30 billion only for Hotel 101 part, not including other businesses in DD. How can we validate current only the current 23 billion peso valuation compared to the what you computed, which is 30 billion? Um, we have to double check your numbers, but I think that the market is not really looking at this particular um, aspect of DD, hence the current lower valuation than what you have computed. Um, the outlook for for the whole property sector as a whole has improved with the rate cut and the anticipation that lower interest rates could spur demand for properties. But this is only a very recent development, and so I think DD um, is still it's has not yet felt that, or the outlook for DD is not yet um, feeling that positive push from the rate cut or the improved outlook for the for the sector as a whole, and most of its assets are not. Um, I believe this is mostly commercial and office spaces, which the outlook for which is not as good as in the residential segment of the property sector. Admittedly, I'm not very familiar with with DD in particular. Maybe Rainer can add
yeah.
something.
So in terms of the potential listing of Hotel 101, I think we haven't had any updates regarding that. So we don't really, basically the market, especially here for DD, basically it's on a risk off mode first because basically a lot of things that can still happen, whether or not basically there is that risk that it won't push through. So it is possible that the surge that we saw prior had already taken into account that potential listing, but afterwards, after months or probably I think close to a quarter of no updates, maybe investors are starting to become more. Basically, they want to get something, or basically they want more updates to it. So basically, they parang nainip sila. So they look for other place first before looking back at DD because well, uh, basically it's ano tawag dun, fully priced in for that play, and it could come back if there is more certainty towards the potential listing.
And also, if an investor would be interested in investing in the property sector, um, there are other names that are more attractive, or other segments of that sector, such as REITs that um, would benefit more from recent economic developments than DD, which could also be another reason why there is not much interest in that stock. Okay, and next question from also a longtime viewer, LB De La Cruz. Thoughts on the financial and property sector. Notice that the property sector has declined this week. Sorry, may nakaharang sa view line ko. On the other hand, bank sectors traded higher. I think since you're also asking for the charts for the big three banks, video, BPI, and Metrobank, these three have traded higher in recent days, mainly because they're part of the index and the index has gone up. So especially for BDO, which has a relatively higher weight, it's not in terms of fundamentals for the banking sector. The rate cut actually is positive for the short term, since this will um, reduce interest expense, and so there would be a positive effect on their net interest margins. And also, it's anticipated that loan growth would um, improve as well with the anticipated lower interest rates by next year, which could which could have been a catalyst for the bank for these three banks in particular. These three also had very good results for the second quarter. Um, but the banking sectors are trading already near their long-term mean valuations in terms of price to adjusted book value. So we're currently neutral on these banks. And then
Yeah, I think we can show them the
Oh,
chart for
chart.
the big three
Great
banks.
charts now.
Yeah.
BDO trading in an ascending channel. Look for resistance at 164. So you may want to lighten if you have it. After that, the BPI could be the longer term trading in an could potentially be bearish as it becomes a rising wedge, probably lighten also closer to 133 pesos per share. Metrobank also trading in an ascending channel. You may want to lighten closer to 82 pesos per share.
Metrobank recently announced the or fixed the payment date, ex date and payment date for their regular cash dividend. So in total, they have paid out, or they will be paying out 3 pesos for this year in terms of regular cash dividend, and there was a special cash div of 2 pesos earlier in March. But the one that is having its ex date recently in September on September 4 is only for 150 pesos. So that could have a um, also been a reason for Metrobank in particular pushing higher over the past 2 days. And then
We have a lot of property questions. We can take from Emmanuel Kyle. What is your 5 to 10 year outlook for the earnings of property slash real estate stocks given the increasing trend towards work from home and e-commerce biting into market share of traditional retail? I guess we can take a look at that as well. But initial thoughts on your second point, e-commerce biting into market share of traditional retail. I think over the past, well, at least as of the first half of 2024, I think we're seeing a trend more of traditional retail uh, basically or practically cementing its um, dominance into that space, mainly because consumers prefer traditional retail more compared to e-commerce. That e-commerce currently is more of an alternative sales channel for traditional retail. So in the likes of the malls, I think about 90% of their sales are still coming from the traditional side, and just e-commerce even less than 10%. So really e-commerce, they're not really investing into it so much compared to where we were during the pandemic. And mainly we are seeing consumers preferring to go back to the physical stores and basically the the thrill of shopping physically uh, compared to just shopping online, and that's why we are seeing the trend that e-commerce is more e-commerce going back to its growth trajectory prior to the pandemic. So it's a slow upwards trend, which during the pandemic heightened that space, but now has shifted back to its trend. So basically, e-commerce just now it's just more of an alternative sales channel, not really the main sales channel for the retail players.
And adding to that, the commercial segment for the property companies also benefiting from the strong growth in restaurants and um, food establishments, which is actually one of the stronger growing segments of consumption GDP. In terms of office the office segment, that has been negatively impacted by the trend towards work from home. That's correct, and also some we 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 are likely to see those companies that have a little bit of exposure in pogos also see uh, or at least the current vacancy rates are expected to increase further in the next few months once the focus are completely gone. Currently, the vacancy rates I think are at about 20%, which is quite high still if we compare it to uh, pre-pandemic levels. But the bright side naman for the property sector is the residential segment, particularly as I earlier mentioned, the expected um, reduction in interest rates. This could spur demand for for homes, um, not just in the vertical segment but also in the horizontal property segment, especially with the long term trend that is actually still in place, which is the demographic dividend the Philippines that the country is benefiting from. So greater household formation and more demand for housing, um, which the properties these property companies would be the ones to supply. Uh, I think also we can also see this in the mortgage loan data for banks. So it's only now starting to go back up again. So as the interest rates move lower by next year, um, this would help not just the residential property sector, but also that retail loan segment for the banking stocks as well. ALB is also asking for charts on some property companies. The upward pa in the earlier in the chat box.
So
So
SMPH, Ayan, and well RNC.
Okay, quick little SPH. So SMPH is trading within a large ascending channel. Likely will reach 33.30, possibly by about November. So you will not like then. Looking some.
Aldi.
ALN similarly as well. Um, if we project this recent, possibly closer to 40 by also by November. So maybe you want to like 40 by November.
Yeah. I think we have one last RLC. More of the yeah property.
So RLC is RLC is still in a downtrend. Best case, it's trading in a bullish moving wedge, but so far has not yet broken out. So probably next test of support at 14.18. You should probably wait for a reversal if you are more of a trend follower.
Okay. So going back to the questions, so let's look at the questions. Best.
So also from LB De La Cruz, how's the leaders going on? Or how are the leaders going? Converge Plus and ICT. Maybe Rainer can talk about Plus later. But for Converge, this has been one of the leaders for the index. They actually had a good earnings quarter, but if you look more closely into their numbers, the earnings growth is coming from um, what we call below the line items. So mostly from lower provisions for doubtful accounts, lower interest expenses, um, and the main or the core metrics for their businesses actually not as good as we would like. The ARPUs or the average revenue per user for Converge is still on the decline since they are focusing more on prepaid subscribers that are would could be considered less premium customers. Um, in the second half, also they're expecting great operating expenses to increase from greater ads and marketing expense. So this could start eating into their earnings as well. So we're not that keen on Converge. And on ICT, also one of the better performing stocks in the index, um, also had a very good quarter and first half actually, with their earnings exceeding the consensus estimates or the market expectations, mostly on sustained volume growth. And there were some tariff increases that were implemented late last year that resulted in higher yields for ICT, for so higher yield per TEU or the unit of measurement for their containers for the container shipping. Also, there are still a few tariff increases that are set to be implemented in the third quarter, so that's positive for ICT. However, it's also trading already near the mean PE, so we're actually uh, going to update our outlook on ICT as well. But since it's already nearing the mean, the potential upside is very small now compared to before. So um, we don't recommend to chase ICT for in particular. There are also some headwinds ahead for the company. So the November elections in the U.S. Um, Depending on the result, we may see some uh, negative effect on global trade volumes, which would also read down negatively to ICT. And also, we are awaiting the result of the hearing on the uh, their on the protest on their bid for one of the largest ports in South Africa. So if that doesn't come out their way in September, there could be some negative sentiment. However, I think the probability is low for that, and they are still expecting to be able to consolidate that very large port in the fourth quarter, which would um, actually drag down their yield since it's a very low yielding port in the short term, but over the long term, it would be very beneficial for the company. So once those two hurdles are gotten past, um, they're the we may we may be a little bit more positive on ICT, but for now, uh, yun nga, we don't recommend to chase. Okay, so for Plus,
Yeah, for Plus, I think the share price or the share price performance is speaking for itself. I think today it reached another all-time high for the company, and uh, just looking at its first half, second quarter numbers, it was really ahead of its game, ahead of everyone's expectations, with the help of the Pagcor share being dropped, which led to Plus's net income to grow quite significant in the second quarter, again reaching past all of our estimates. And just recently, we've also upgraded our target price. And if you want to know our next target price for Plus, uh, I hope you are a MyTrade subscriber, so you are able to access that. And basically, Plus, ever since I think since last year, we've been positive on it, and it has been doing good, and we believe that there is still room, or there is another leg for Plus, given its strong momentum and as well as the pending further Pagcor share cut come January 2025. So really strong for Plus, and maybe you can take a look at the charts for some of those names.
for Plus, just want to add, also adding to its momentum is the fact that it was added to the small cap index of the MCI. So, or it will be added come the end of the month when the change will be implemented. So that's also one of the things that is going positively for Plus.
So if we extrapolate the recent trend, it suggests it can go very high. Can it go that high?
Yeah,
Open an account.
open an account so you can read our report on Plus. Okay, so
Okay,
I think you
can we
move on.
see other questions? Maybe
Yeah, we have a lot.
give chance to others since LB also has more questions. From Louis Kial. I hope I pronounced that right. What's your take on Bloom?
Bloom, well, it has basically the opposite of what happened to Plus. Bloom has been much weaker in Q2, and again, it's also evident on its share price performance. Despite it opening Solera North for about 37 days in Q2, GGR numbers for Solera North and Solera Entertainment City was much lower because of the absence of the VIP segment. And even partially, the mass segment has been weaker in Q2. So, what we are seeing though for Bloom, that it has basically been oversold over the past days. Uh, think the recent rally showed some support on closer to 7, which is, we believe, at that price point is a good point to accumulate Bloom, since we believe that Solera North will start ramping up in the third quarter, fourth quarter, and moving forward. So basically, that will be positive for Bloom, for the totality of or for the consolidated Bloom for the rest of 2024 and heading into 2025. Although, if the question is if it will head back to prior numbers close to 13 pesos, I think it will have a harder time because, again, of the absence of the VIP segment, which are the Koreans and the Chinese. That's the nationalities that they haven't seen compared to last year, and that is trimming their gross gaming revenues for this year and possibly for next year. So Um, for Bloom, it is seeing challenges, but I think we continue to look at it, especially at lower levels, if one would want to initiate a position on the stock.
So more for long-term investors.
Yeah.
Also, one of the reasons Bloom has been, bless you, one of the reasons Bloom has been quite weak over the past few weeks, its weight in the PSCI has decreased when the PSCI rebalancing took effect last August 5, I believe. And then also I believe its weight in the MSCI index also will decrease pa when the MSCI rebalancing takes effect at the end of this month. So there. Okay, next question. Sorry, I'll be give chance to others with it. From Do you want to talk about home? Nelson Eliab has home. It's gone. Where is it? Or maybe before that, from Emmanuel Kyle asking about SecB. Um, SecB, there's window dressing in the form of cash flow hedges recycled into the P&L in the recent quarterly rep
Report.
report, okay, shown in the other comprehensive income. Removing that shows that earnings have declined. Actually, we're not very keen on SecB. We've Security Bank actually had lagged the industry um, in terms of earnings for several quarters since last year, and for the most recent earnings report, uh, net income, although the the usual bank metrics such as loan growth, interest income, and their NIMs have all improved greatly. So loan growth was very robust at 20%. Net interest margin was declined a little quarter on quarter, but year on year actually expanded. Um, we don't expect its NIMs to be able to sustain that expansion, so we are expecting it, like other banks, to feel more the NIM compression from lower interest rates going forward. Um, the robust loan growth that it saw in June, or as of June, was mostly from uh, higher consumer loans, which would give higher yields, but also entails higher provisioning, which is actually the one that um, dragged also their bottom line, since they're required to since these retail loans have higher risk, or entails higher risk, the provisioning needs are also higher. So yes, not we're not very we're not recommending Security Bank at the moment.
Okay, so I think we can go back to Nelson Eliab's question. Has home reached the bottom, or will it go deeper? There is a divergence in the technical indicators, hence the question. So I think IC can better address this question since it's on the technicals.
So you have right. So Nelson is right that there is a falling. Typically, it's a bullish falling wedge. This pattern is typically a bullish falling wedge, but it didn't break out to the upside, so it actually did not complete. It actually continued lower. So to answer the question, is it a bottom? It's not yet. Has not yet bottomed. You can see the oscillator. I'll show you. It's just oscillating up and down. Hasn't made a new high. It hasn't broken above 83. So, but if there is a positive pickup in volume, hopefully it could be for the bulls on home. Hopefully it could be the start of possibly some capitulation. Possibly, we have to ask Rainy if there any signs of could there be any sign of turnaround here for CE?
Well, yeah, based on recent earnings results, not so much in terms of fundamentals for home. So maybe it needs a little more push in terms of that. So not really, uh, not really a good sign for although maybe it's time to look for another stock. Okay, I think we have time for one last question.
Mm, yeah, further down.
Okay, I can take this one. So from Emmanuel Kyle, comments on poor financial performance for SSI for the year so far, earnings declining and margins deteriorating, short-term speed bump or long-term weakness in the business/industry. Well, yes, I agree that in terms of financial performance, I think that 2023 was really a strong year for SSI. Unfortunately, they weren't able to show that in well this year so far, the first quarter and second quarter. Although again, it is basically on a higher base. Uh, they were able to show some strength in terms of its sales, some growth still. However, what is happening is they are spending more in terms of say on OPEX, which as you mentioned, it is seeing some declines in margins since they are ramping up store upgrades and as well as marketing expenses. So our expectation for SSI it's actually more of a short-term speed bump. That's why, although it has seen its share price decline, it's not. We still think that it could turn around, especially come later this year, which is normally the stronger year for SSI. And basically, we recall that in the first half of 2024, consumer stocks have really been affected by basically the high inflationary environment affecting the consumer wallets. That's why we're not so surprised that as I did see some slowdown, but I think there are signs that it is turning around with inflation tapering off and as well as the rate cuts that should boost consumer spending to the upside. So could be it's something to anticipate in terms of earnings for SSI. So
Okay, I think that's all we have time for in terms of questions. So I think we were not able to answer all of the questions in the chat, and we'll be posting our responses to that on our Facebook group, MyTrade Map. So if you're not yet a MyTrade client,
yeah.
please sign up.
Yes, and I think there is one question that there is one important question that we should address from Ken. So does Abacus have an online trading platform?
Yes, it's called MyTrade. It's the one that sign. So we launched that 2017, and yeah.
Yes, and maybe our team can reach out to Ken to facilitate the introduction better. So again, thank you everyone for your time in today's
Beyond connection.
Beyond Connections. So thank you everyone.
Um,